Welcome to another Straight Up Tuesday tip. I'm 𝗤𝗃𝗃𝗀𝗁. With me as always is Mark Ainley. I just show our guests how to do it.
I thought you were just going to say hello, how you doing?
No. We're coming right in firing.
Hot, man. Hot.
I mean, we had him just record an episode, which we'll link to in the show notes here. But Eric, he was standing to try to get that out there. So I had to show how it's done.
Yeah, it was awesome.
It is your show.
All right, so listen, we just had you on an episode. We wanted to get a Tuesday tip out here. Yep. You have built your business on raising money from others to get deals done. Mm-hmm. And that is something that a lot of our listeners, they've approached us on, they've had questions on, they found it hard. It's difficult to ask for money.
Yeah.
So can you give us just some tips for that person who maybe they bought their first building, to get the second one, they need to raise funds?
Yeah.
Talk to us a little about how do you search this out? How do you have that conversation? For whatever guiding principles you can provide for that person.
Okay. So on a fundamental level, one thing that helped me is understanding that there is no shortage of money, but there's a huge shortage of operators, people who know how to find the deals, source them, bring them, package them, and bring it to the people with money. That would be like me, right? Or whoever it is that's struggling to raise capital. That's you. So if you just learn that aspect of it, raising money will be a lot easier, because there's a lot of us looking with money, looking to put it into deals. That's one. Now, when you bring it over, you got to understand, like, if you're experienced, then this carries a lower risk, right? So you can get a better deal for yourself. But if you're brand new, then you got to understand you have to build your reputation first. So in the first like 3 deals, you may have to give away a huge chunk of your profit to build your name off of that, right? So when I started raising capital, I gave away huge percentages of my 50% of my first building, 60% of my second building, 60% of profit on one flip, and 50% on another flip, right? Those investors are still celebrating today, right? But that was important, because if I didn't do that, I wouldn't build a track record of results and success, which allowed me to now raise capital a much easier way. So I went from profit shares, which is the easiest way to raise capital, just give them like a bulk of the profits. Second way I did it was a flat return. So I would just tell investors, hey, you give me $100,000, I'll give you 10% on your money, right? Which made it easier for me, because now the results are not tied to anything. You are going to get 10% one way or another. So it was a little bit easier to raise capital, even though I thought it'd be harder, right?
Yep.
And because you're doing the flips in like 5 to 6 months, damn near 20% on an annualized basis, right? And then the easiest way, like the way I do it now, which is the cheapest way, but once you can showcase that there's really no risk, is I just went and so my hard money is giving 12% on an annualized rate for 12 months. I do the exact same thing without any points, without my title charges going up. So I give all my investors 12% on their money on an annualized rate, 6-month term with a minimum payout of 6 months. Yeah. Right? So they still win. It's better than putting their money in the bank. And you have to understand it this way. Your investor is not an active guy. Like if someone comes to you guys and says, hey, give me $200,000, now you're gonna be like, why? Because I'm the operator. I can just go make my 200 to 400. You have to find that guy that has the capital, but not the time or the desire to go learn a whole new business to make money, right? And I came up with this because I had money, because when I was trying to be liquid, so I had left money in the bank, they're paying me 4%. I was like, there's no way I'm the only person on earth with money sitting in the bank doing nothing. So when you pitch it in the way, you're like, I'm not giving you 12% a year. I'm giving you 3 times what you're getting now, but very minimal risk added to it, right? Because I personally guarantee all my loans. So that way, it's like worst case scenario, you take the property or I owe you cash. And it makes it so easier to raise money. And there's no easy way for me to get out of these loans, right? Like my promissory note is 1 page. It's very straightforward. It has all the extra strategies that we have in there. And it's super easy for me to pitch an investor, because they don't have to read 20 pages of attorney language, which I didn't even understand. Because my attorney sent it to me. I said, do you want me to be broke? Right? Like if I don't even know what I'm sending people, right? I'm like, I just need to say how much I'm taking, what I owe them, what is the exit strategy, and what's the collateral and personal guarantee and lien position. That's it. That's all it's on my note. We could fit it all on 1 page, and it's super easy. Like anyone understands it. So if it's more simple, it's easier to do.
Well, I love what you said, and I want to make sure I repackage that.
Mm-hmm.
The first thing that you wrap your head around is the fact that there's a lot of people out there that have a lot of money that don't have anything to invest in. And there's not as many skilled people that could go take their money and actually add value.
Yep.
That's how you wrap your mind around, like, these people need you. Like that's almost like you're actually
the golden goose.
Yeah, you're doing them the service by actually even asking them. So that's a mindset thing right there in itself. A lot of people are scared. Secondly, what I heard was they're not making money anyways. They might be at best making 4 or 5% on their money, and you're going to offer them an opportunity to maybe double that. Double or triple that.
Yeah.
If you're partnering in, triple, maybe more than that. But if you're just doing straight debt service, maybe double. And then thirdly, you're saying that there's no risk in there. Yeah. And the only thing I'll just say to that is we're trying to raise money for an industrial fund right now, and I've been listening about pitching and stuff like that. And the one thing that I keep hearing over and over again is when you're trying to raise money, your goal is to eliminate the risk from their mindset altogether.
Yeah.
And that's kind of what you said, just in a backwards way. But if you're gonna give me double my interest that I'm making right now,
Yeah.
you're gonna create this opportunity for me, and I really have no risk. Like, they have no reason to say no.
It's a no-brainer.
Yeah. For the investors starting out, another important thing to pull out here is, when you're getting started, like, you are a higher risk portfolio.
Yes.
Right. You are just, if you're a commodity, like, you are higher risk because you are unproven, and therefore you have to give up a bigger portion of the deal. Right. And too many people lose sight of that because they're like, well, I read Joe Ferris's OM and he does this. And it's like, all right, well, he's got, $10,000.
He's in a different position. Yeah.
Yeah. And you're flipping a home in whatever suburb, right? Like, this is different position.
Can I piggyback off of that?
Go.
So I was able to give a decent profit share, like 50, 60%, right? But that's because I also had like 7 years of real estate experience before I even went into investing. If you're brand new, like a 21-year-old or a 25-year-old, and you've been an accountant for 6 years, right? And you're just even a higher risk, right? So it'd be so much more beneficial if you found like one of you guys, right? If someone brings you a deal and says, look, I just want to learn alongside you and just get a little credit on the deed. Give me 5% ownership, so my name is on the deed, right? Do 3 of those deals, and you can learn from my experience instead of have to go do everything yourself. And as long as you bring me those 3 opportunities, you will learn, and now you're in a better position to go do your capital raise.
Yeah, you shouldn't be learning on someone else's dime, right? Like, if you're taking money, like, you gotta have, things go wrong, but you gotta understand, you had to have gone through the fire at least a couple times, right?
Or at least your investor better know that you're learning on their dime.
I think the disclosure of that is important, because I think it's really hard to not try to learn on someone else's dime. I mean, anyone
Very
that gets
difficult,
into a new business, like whether it be flipping or just any service business, like you are learning on someone else's dime
Always,
for years.
Yep. All right. Good Tuesday tip we snuck in here. What we ready to wrap this?
Yeah, for sure.
All right. Who are we playing for? Who's sponsoring?
All right, Kaiser Group is our sponsor today, and we're playing for Jennifer Bagwell. So, Jennifer, if one of us gets this question, this Chicago fact right, you get a $50 gift card brought to you by Kaiser Group.
All right, today's Chicago fact. This is, we're going to talk about the interim mayor. Before I say his name, side question. Do you know who it is? The interim mayor after Washington died.
Washington.
Harold Washington, or the Chicago interim mayor.
I
was wondering if you just knew this.
Oh, she's never getting this gift card. I'm sorry.
No, we're gonna get this. This isn't the question. This is part.
Thank God.
No, I don't know.
I didn't know how entrenched you were.
It's a
with this.
male. I know that.
All right. So interim mayor David Orr. He was mayor after Washington died.
Oh, I didn't. Okay.
He holds the record for the shortest time period as mayor. How long was he mayor for? And your options are 1 day, 1 week, 1 month, or 1 quarter. How long was David Orr the mayor of Chicago?
Can I have 4 guesses?
You guys got 2 out of 4. Figure it out.
Okay.
Washington died in office, I think I think it was in the winter, so it would have been. I think then elections are in April, so it would have been. I'll go with a quarter. I guess would be my.
If he's going a quarter, I got to go less. So we can't both be.
Yeah, we got to give 50%.
I'm gonna go with the opposite direction. I think I'm gonna go. No, 1 day's too crazy. 1 month. I'll go 1 month.
Oh, guys, 1 week.
Oh,
So he was a reformer against the Democratic machine. So then they, like the week after Washington died, he was the vice mayor, and like everyone voted him out.
Really?
Yeah.
I guess I did not know that.
So it didn't make it to he did not make it to election.
Oh wow.
Can we do a retake? We can edit this out. I'll go with 1 week next time.
Or ended up he stayed in politics, so he ended up being like the clerk.
Yeah, and then he was a city council, and same thing. They booted him again for trying to.
You cannot take down the machine, dude.
No,
wow, that's crazy.
He wanted the council committees to be more accountable for their budgets. He got kicked out a week later.
Wow.
That's Chicago for you.
That's insane.
Accountability, get out of here, buddy.
Aren't we in debt?
All right, Jennifer, I apologize. We did not get that right, but we'll put your name back in, and you'll get drawn for the Chicago Fact in the future again. Thank you. You actually went on and left us a review on Spotify, so thanks. Man, thanks for coming on for the Chicago Tip. Listeners, do you know someone that'd be a good straight up Chicago investor guest? Make an introduction today. We'd love to have them on here. Our goal is to add you as the listener value. Make those referrals. You go straight up chicagoinvestor.com, or our emails in the show notes. So thank you guys, listeners. We'll see you on Thursday.
Thanks all.